ní tòótọ́ ṣé pé tí mo bá ṣí àkáǹtì pẹ̀lú Action wá máa máyé rọrùn fún mi.
Ina son iya karbar kudin Access.
Ayodele Emmanuel Alexander, and I'm an accountant. I work with Dula Agro Services Limited. I know about Action Microfinance Bank over 8 years ago. We following Action on Facebook as well. So when I saw the advert on Facebook, I just had to give it a try and see if I can, and see if it's actually working. Yes. So then when I tried, and the first one, I think after I took the first loan, the following day I paid off the 8,000 naira I took from you guys, and I actually needed to balance up my kids' school fees. I was having a short of funds. I applied. I was surprised I was given the sum of 52,000. The improvement was okay compared to the first and second. Yeah, so I would like to say that I am very, very happy with it. At least it met my needs as at when I expected it. Yeah, I'm very grateful, thankful. It's been like that very Sunday was like Asa came in like a God for me. Yes, it came in like a God for me. Like when after it started backing on everybody around me, nobody was ready to turn up for whatever I needed to do with money. Asa came in for me. So that alone, I am really, really, really grateful for.
Okay, I'm Rosemary Okodion. I'm a chartered accountant by profession. The Action loan, I got to know about it through my husband. I think he mentioned it at home. And as at that time, our son was just about resuming school as well. So I thought, okay, let's try it out and know how and see how it works. So the process was quite fast. Accessing the loan wasn't so difficult, because I think after registration and all, we're able to access the loan by the next day. When they said they were going to send the loan to the school, we're able to access it by the next day. So it was quite fast. Accessing the loan was quite fast, because I think as at when we registered and all, I got the money in my account same day. Then by the next day, they were able to transfer it to the school. So that was it. Repayment has also been good. Since there's a fixed date as to when you are to repay, so it has been good also. Repayment has been good. So far, then the flexibility of payment, because there were options of like how you want to pay. So there were different options. So the flexibility was okay with me. I liked the flexibility depending on how one wants to repay it. So I enjoyed that flexibility. The ease of accessing the money was good, because I think we got it. I think as at the day we registered, my account was credited. Then the next day they were able to send to the school. So that was the flexibility I really enjoyed that. But the loan experience so far, for me, it's good. It's good because it is that stress. Then being able to spread the repayment plan was quite welcoming for me. I'd like to say kudos to Action. They are doing a very good job. Like, it's taking stress off us, like certain kind of stress. Like the one doesn't really have to bother about surely that school fees load. Like since it's a quarterly thing, so at least taking off that stress, like trying to, because for us it was the first time. It was the first time we had like paying so much for. So it really took off the stress and stuff. Trying to, so it was helpful. So I was saying a very big thank you to Action for that, for the school fees loan. It's been very useful to the family, and we appreciate it. Thank you to Action.
My name is Mr. Anselm Chukwujeku Anetos.
Mrs. Gabriel Esther. I'm catering for people, catering work.
We are doing motor and motorcycle spare parts. 20 years.
I've been into catering for almost 18 years. Wọ́n help business mi láti fún mi ní loan of 300. So at the end of the day, wọ́n padà wá fún wa ní 500,000 báyìí. Nígbà tó kọ́ débí, so náà kọ́ fún wa ní 300. Láti lè máa boost the business wa. Dúpẹ́ lọ́wọ́ wọn.
In many ways. So they help me boost my business in terms of capital and other facilities. I rate them very, very, very hard.
Wọ́n ṣiṣẹ́ takuntakun torí ní àkọ́kọ́ nígbà tán kọ́ débí wọ́n wá sínú ọjà wa wọ́n bá wa ṣe environmental ọ̀dọ̀ wa wọ́n dẹ̀ ṣe dáadáa. At the end of the day wọ́n tún padà wá ṣe health check-up wọ́n padà ṣe fún wa níbí láì gba owó náírà. Àdúpẹ́ lọ́wọ́ Action iléeṣẹ́ yìí ní jóná.
Action, star 572 hash, na the code. Action, star 572 hash, money go. Open account with Action to save for tomorrow. There's an easy way to bank every day. Hey, star 572 hash, now here be the code. I know get to a harder. Oh, it's a life. Oh, money on the go. Family and friends and business partners on top your phone. Wherever you are, whatever you do, hey, pay your bills and recharge your phone.
Action Bank Piano star 572
Má ṣe ìyọnu láti lọ sí ilé ìfowópamọ́ ìwọ ṣáà ti tẹ star 572 hash lórí ẹ̀rọ ìbánisọ̀rọ̀ rẹ.
Action Microfinance Bank. My future is bright.
Nítòótọ́, ṣé pé tí mo bá ṣí àkáǹtì pẹ̀lú Action wá máa máyé rọrùn fún mi?
Ina son iya karɓar kuɗin Access Bank na yi amfani kai ƙara kasuwa ta.
Chai, Action Bank ń kọ́ra ní ATM card.
No need to stress, I no need the stress. With Action Microfinance Bank, I deal with the best, I no settle for less. Bank where they make it life better. With checking the money, you fit open account. Save money now to pay your bills. And you fit to get the loan to grow your business. Well, my future is bright, oh. My future is bright, oh. With Action Bank. With Action, oh. My future is bright, oh. With Action Bank. With Action, oh. My future is bright, oh. With Action Bank. With Action, oh. My future is bright, oh. It's bright, oh.
Action Microfinance Bank. My future is bright.
Chai, Action Bank ń kọ́ra ní ATM card.
No need to stress, I no need the stress. With Action Microfinance Bank, I deal with the best, I no settle for less. Bank where they make it life better. With checking the money, you fit open account. Save money now to pay your bills. And you fit to get the loan to grow your business. Well, my future is bright, oh. My future is bright, oh. With Action Bank. With Action, oh. My future is bright, oh. With Action Bank. With Action, oh. My future is bright, oh. With Action Bank. With Action, oh. My future is bright, oh. It's bright, oh.
Action Microfinance Bank. My future is bright.
Mama Soft, you don't dey stock your shop again. Come cut soap for me, abeg.
Iya Comfort, this one pass soap oh. Na Action loan do me well.
Loan care, no be loan I go collect wey dem say make I go bring my late papa birth certificate. Abi I no just the one wey dem say I go deposit my 2 legs before dem give shikini loan.
Hey, this my bank no dey do like that oh. In fact, dem dey carry my matter for head. As you apply like this Biam, they don't serve you the loan and plenty better support.
Abeg you say that name na Action action, abi waiting.
Na action me I talk.
At Action, now your matter dey our head 24/7 unto how we go fit help you better your life and your business, because we don dey do am for 14 years. Dial *572# now. Download the Action mobile app or visit any branch wey near you. Make we begin run things for you. Action Microfinance Bank. My future is bright.
Good morning, everyone, and thank you for joining the Action Microfinance Bank Financial Inclusion Seminar. My name is Paul Ehiagbonari, and I'll be your anchor for this event. I'd like to, on behalf of the management and staff of Action Microfinance Bank, welcome our panelists, welcome our guests, welcome everyone from around the world who has joined this session today. We believe strongly that it's going to be an enlightening session. It's going to be an educative session. It's going to be a session where we will find out certain things that will help the industry at large. On this event today, on this seminar today, we have industry leaders. We have renowned innovators. We have individuals who have shaped the finance industry, individuals who have shaped the digital literacy industry, individuals who have created and enabled culture-shaping events as far as financial literacy and financial access is concerned. We will at some point make the appropriate introductions of the industry leaders and astute professionals that we have on this session today. Being the 25th of our series on financial inclusion, our theme for this seminar is enhancing financial inclusion, leveraging digital literacy products and services. Why did we choose this theme? We chose this theme because we wanted to explore and evaluate the critical role that digital literacy, innovative financial products and services play in extending access to financial systems and resources to underserved populations in the Nigerian economy. Financial inclusion is something that the central bank has been pushing, that several World Bank initiatives have supported, and all, but we are not where we need to be. And Action Microfinance Bank, prides itself as being at the forefront of driving financial inclusion, enabling individuals and small businesses, small, medium businesses to come up higher economically. And this is one of the reasons why we have selected this topic for this seminar, so that we're able to educate, we're able to unbundle, we're also able to look at the challenges that have impacted financial inclusion from becoming a very huge success today and what could be done. It's a session where we would learn, unlearn, and relearn strategies, insights, and key information we need to turn around the level of progress as far as financial inclusion is concerned. Once again, on the behalf of the management and staff of Action Microfinance Bank, I'd like to welcome everyone to this financial inclusion seminar tagged Action FIS 2023. Action Microfinance Bank is committed to empowering low-income earners and as well as small and medium enterprises, including micro businesses as well. We just want to make sure that people come up higher economically, and we have various initiatives to drive this. So thank you once again. Just take a seat, relax. I'd like you to indulge on your presence of mind because it's going to be a very insightful session. So once again, welcome to Action Microfinance Bank Financial Inclusion Seminar. To proceed in this event, I'd like to, at this time, call on the chairperson of the board of Action Microfinance Bank, Adenike Laoye, ably represented by a member of our board, Prince Olumide Obayomi, to take on the opening remarks. Mr. Prince Olumide Obayomi, please, over to you. Thank you very much.
Good morning, everyone, and thank you, Paul. The chairperson of the board is not available, as announced standing in for her. I'll just go straight into the remarks for our seminar. Distinguished members of the board of Action Microfinance Bank, our eminent colleagues and captains in the industry, renowned speakers at today's event, gentlemen of the media, our partners, ladies and gentlemen. It gives me great pleasure to welcome you all to our bank's 2023 annual financial institution seminar, the sixth in the series. The focus of the seminar this year is to explore how we can improve on the quality, value, and spread or reach of financial services through the instruments of digital literacy, product offering, and delivery of services. Hence, our topic for this year's seminar is financial inclusion, leveraging digital literacy, products, and services. To help us explore, evaluate, and expound the relevance of digital literacy, innovative financial products, and quality services in extending access to financial services, financial resources to the undeserved, as we continue to improve the experiences of those currently being served, are a select group of experts who will be introduced to you presently. Action Microfinance Bank for more than 16 years has been in the forefront of financial intermediation in the microfinance space in Nigeria. During this period, we have empowered small and medium-scale businesses to expand profitably as we impacted positively on the lives of the poor and low-income individuals and households. Financial inclusion lies at the heart of Action Microfinance Bank's mission and vision. Our commitment to annual seminars to discuss issues and matters around financial inclusion is a testament to how important we view financial services deliveries to Nigerians wherever they are. Through this year's seminar, we aim to foster innovation in financial inclusion within the Nigerian financial services sector through the sharing of knowledge and experiences, create a forum for collective learning and the exchange of experiences, and finally, influence policy initiatives in Nigeria's microfinance sector and develop benchmarks and standards for best practice, particularly in the provision of digital financial products and services. In an era where digital advancements are reshaping the delivery of financial services, it is imperative for us to explore the intersection of technology, literacy, and/or education, innovative product and service delivery options to empower individuals and communities. Our past seminar topics reflect the needs of the time. From making financial inclusion a certainty in Nigeria by 2020, the topic for 2017. In 2018, we had digitalization as a tool for deepening financial inclusion and the role of regulation. In 2019, the topic was reemerging microfinance bank, the digital reality. There was a gap in 2020 due to the COVID-19 problem around the world. So, but in 2021, we resumed our seminar with the future of microfinance banks, any existential threat. And last year, the topic was financial inclusion using big data to improve customer experience. I'd like to appreciate our distinguished speakers, esteemed stakeholders, and the media for agreeing to partner with us on this journey. To all present, thank you for making time to be part of this impactful seminar. I implore you all to pay rapt attention to the insightful discussions and experiences our speakers will be sharing. Let us engage meaningfully and explore opportunities for the betterment of our society. I wish you all a memorable and impactful session. Thank you for your attention.
Thank you very much, Mr. Prince Olumide Obayomi, representing the board chairperson. Thank you very much for the speech. And a remarkable line there. Let's collaborate, and get a better future for us as far as financial inclusion is concerned. For those who just joined, I'd like to welcome you once again on behalf of Action Microfinance Bank. And in case you have a question or have a comment, please, you may use the Q&A button at the bottom of the Zoom interface. You can as well raise your hand and someone will talk to you, but we'll ask that you let the session go, and at the appropriate time, we'll take on questions and comments as may be required. So once again, welcome. To take us further, I'd like to call on the Managing Director, the MD CEO, Action Microfinance Bank, Mr. Taiwo Joda, for his address. Mr. Taiwo Joda, over to you, sir.
Thank you very much. And I want to welcome warmly everyone this morning to the 6th Annual Microfinance Bank Financial Inclusion Seminar. It's being hosted virtually today, and I truly extend my heartfelt gratitude to the distinguished individuals that are present today, including members of our board of directors, our esteemed panelists, the moderators, my colleagues in the microfinance industry, representatives of international organizations, representative of the regulators, including the Central Bank of Nigeria and NDIC, other distinguished invited guests and participants that are joining us globally. This year's theme is Enhancing Financial Inclusion, Leveraging Digital Literacy Products and Services. And today we gather to explore innovative pathways towards financial inclusion in Nigeria. Action Microfinance Bank, with over 16 years of empowering businesses and transforming lives, have played and continue to play a very key, vital, and pivotal role in this journey. The objective for us are twofold. First is to inspire innovation by sharing practical knowledge gained during our decades of operation. And second is to foster collaborative learning and to influence policies, particularly in the responsible provision of digital financial products and services. Financial inclusion is fundamental. It's a fundamental human right, and it is about providing access to affordable and convenient financial services for every individual, regardless of their socioeconomic status or their standing in life. Action Microfinance Bank commitment to this noble cause is unwavering, with a mission to economically empower micro-entrepreneurs and low-income earners in a sustainable, ethical, and profitable manner. Our approach hinges on leveraging digital literacy, products and services to harness the transformative power of the digital revolution. Steps taken include enhancing digital literacy, introducing a range of digital products and services, and forming fintech partnership to drive innovative solutions. The impact of our effort is evident in a positive transformation of lives. If you joined early, you will have seen the testimonies of some of our customers who have been exposed to our products and services. Looking forward, in Axiom Microfinance Bank, we assure you of our commitment to being a market leader in microfinance, investing in technology and innovation, and to stay at the forefront of financial inclusion efforts. Concluding my remark, let me emphasize that financial inclusion is a continuous journey. It is not a destination. While we're proud of the progress made so far, we recognize that there's so much work ahead, driven by our mission, inspired by our customers, and guided by the belief that financial inclusion is not just our responsibility, but our privilege. We are poised for the challenges and opportunities that lie ahead. On behalf of the board, management, and staff of Axiom Microfinance Bank, I extend a warm welcome to our keynote speaker for this session, Lucia Spaghiari, Innovation Director at MFR, and also the chairperson of the European Microfinance Platform. I am optimistic that your invaluable insights, wealth of knowledge, and extensive experience will set the tone for the discussion on enhancing financial inclusion, leveraging digital literacy, products, and services. To our esteemed panelists and executive moderators, Professor Olayinka David West, a board member at NMFB, Evan Johnson, co-founder CEO at Indecina, Dr. Godwin Igiamuso, founder, Lapo Microfinance Bank, Dr. Valentine Obi, founder and group CEO at Intrazac Global, Femi Omogbenigun, MD of Treeline Card Management Limited, Ifeanyi Akosionu, CEO, NQ Digital, Dennis Moniote, co-founder, CEO at Rubix, and Adetokunbo Iginla, co-founder, CEO at Blue Salt Incorporated. I extend a hearty welcome. Your experiences and expertise will undoubtedly enrich our understanding and guide us on the path of enhancing financial inclusion through digital literacy, products, and services. To all attendees, I assure you of a fruitful engagement. Let's stay focused, and I hope that this seminar will be both productive and inspiring. Thank you very much.
Thank you, Mr. Taiwo Joda, for your address. You've highlighted quite a number of things for us to foster innovation, enhancing digital literacy, product services, and digital partnerships. Thank you. I'd just like to highlight at this time, for those who just joined, that we have the brochure, the Financial Inclusion Seminar brochure on the webinar chat. Please avail yourself of it by downloading it right from the chat, so you could go through to see details about our keynote speakers, the panelists, and other information about the seminar. Without further ado, we would like to take the keynote address from our keynote speaker. At this point, we'll take a video introduction of our keynote speaker, and then we'll come back to invite her to take the stage. Studio, please roll out the introduction.
Meet our distinguished keynote speaker, Lucia Spaghiari. Lucia is Innovation Director of the rating agency MFR in France. She's in charge of developing innovative ways to increase transparency in financial inclusion, PayGo off-grid solar, other impact investing areas, and has acquired extensive experience with over 90 field assignments in 44 countries conducted to date. Lucia is the current chairwoman of the board of directors of the European Microfinance Platform. Ladies and gentlemen, welcome the remarkable Lucia.
Thank you very much. Yes, over to you, Lucia. Thank you.
Thank you very much, Paul, and the Action Microfinance Bank. Dear participants, dear panelists, it's a real pleasure to be virtually with you today. Nigeria and the region is especially dear to me, as I was previously based in Cameroon, and I'm also proud to give some gender balance today. So digital channels and technologies can indeed be a powerful means to achieve financial inclusion effectively, in combination with high touch points as needed. For this to work, low-income clients need to understand what they are buying, how to do it, their obligations, as well as possible risks. Products need to be tailored to what small businesses and households need, when they need it, and how they need it. So clients will come back, financial institutions will grow, and all businesses will prosper. If I look 10 years back, and I've been 18 years in the industry, I do recognize that a lot of progress has been made. What we do at my company, which is a rating agency in financial inclusion, is rating, certifications, and digital client protection assessments, including in sub-Saharan Africa. And from this privileged perspective, we see an increasing number of good practices in the areas of digital literacy as well as digital product design. For example, customers with limited digital literacy may be trained by specialized digital loan officers or agents on how to use their credit products. A call center may verify the client understanding of the terms and conditions as a necessary step before approving the loan. Digital education, SMS, and especially videos may guide on how to use the interface and also on how to adopt behaviors and security measures that protect, including against frauds. Interfaces may use local languages and adopt clear and easy step-by-step instructions. When it comes to the design of credit products, repayment schedules can be tailored to patterns and cash flows that are observable in wallets. And the same can be monitored to detect sudden decreases, which may be an indication of financial stress and can help financial institutions avoid over-indebting clients. While progress has been made, as my colleagues already mentioned, we all recognize today that we are still on a journey and work remains to be done. For every one of us having tried to foster digital channels and products, we see that digital financial literacy remains one of the main barriers for the uptake, especially of the low-income, rural, female, and illiterate segments. So microfinance institutions could go up market and serve a better off, more digitally savvy, more stable income population, but would this be in line with the promise we make? And would this be financial inclusion of the low income and the excluded? Plus, competition sometimes is higher up market, and so not even interesting from a business perspective. So I have high expectations and look forward to learning from the valuable insights of the next panels on ways to foster digital literacy and design inclusive digital products. Thanks a lot to everyone. Have a good rest of the seminar, and please, Paul, over to you.
Thank you very much, Lucia. We find quite interesting information from that keynote address, and I'm very sure that we'll take that to heart as we move on into the panel sessions. So right now we'll go into the panel sessions, but before we do that, I'd like to quickly highlight that we're going to be having 2 panel sessions. Panel 1 will focus on digital financial literacy, and then panel 2 will focus on digital products and services, both covering how we enhance financial inclusion. Panel 1 consists of 4 speakers, including the moderator, as well as panel 2. So we'll go into panel 1 now, and we'll take the video introduction of the panelists and the moderators for panel 1, and then we'll come back to do same for panel 2. Studio, please go ahead and roll out the introduction for panel 1, panelists and moderators.
Meet our exceptional moderator for panel 1, Professor Mrs. Olayinka David West. Professor David West is a professor of information systems and a staunch advocate for digital transformation and inclusive finance, with over 3 decades of experience in the IT and financial services industry. She occupies various key positions with several awards to her name. She sits as a board member of Axiom Microfinance Bank. She is the Associate Dean of Lagos Business School, the Academic Director of the Enterprise Development Center. She currently leads the Sustainable and Inclusive Digital Financial Services Initiative. She mentors women in STEM, listed among the leading women in Nigeria's financial technology industry, and profiled on FinTech Times as a leading financial inclusion expert in Africa, just to mention a few. Our prominent panelist, Dr. Godwin Ehigamosoye, popularly known as the grandfather of microfinance in Nigeria, is the founder and group CEO of Lapo Microfinance Bank. As a renowned microfinance expert, Dr. Godwin has grown Lapo Microfinance Bank, founded over 30 years ago, into a conglomerate with interest in microfinance, technology, insurance, leasing, healthcare, and education in Nigeria and beyond. Femi Omogbenugan is the MD CEO of 3 Line Card Management Limited, one of the disruptive financial technology companies in Nigeria. Femi is a seasoned professional whose financial services industry career has spanned over 13 years and has played major roles, including spearheading the design of the first agent banking platform in Nigeria, Freedom Network. Adetokunbo Iginla is the co-founder and chief operating officer, Blue Salt Financial Services, a fintech that focuses on financial inclusion and emerging technologies. His expertise encompasses digital architecture, business strategy, blockchain technology, and product management, fostering growth and innovation across diverse industries. He is a key contributor to major blockchain initiatives in Nigeria, including KibitX and Edcoin. Ladies and gentlemen, a standing ovation for our distinguished panelists.
All right, thank you very much, Studio. And also a big welcome to our panelists, Mr. Godwin Ehigamosoye, Mr. Femi Omogbenugan, Mr. Adetokunbo Iginla. I will be representing the moderator for this session, which is Professor Olayinka David West, and I would anchor this first panel session. So once again, a big welcome to the panelists as we dive into the conversations of the day. To get started, we would look at certain key definitions around digital literacy, financial literacy, and digital financial literacy. I'd like to call on Dr. Godwin, popularly known as the grandfather of microfinance banking, like we saw, to help with some of this clarification. When we say digital literacy, when we say financial literacy, when we say digital financial literacy, what comes to mind? Can you help us, break open this box and just simplify it for everyone? Thank you.
Yeah, okay, thank you so much, and delighted to be a part of this, especially coming from, the very early of microfinance, which was basically not digital, if you like. When you talk about digital literacy, I would say is sort of, pushing forward an extension of, what we have been doing in the sector, that is creating awareness on products, financial products, channels, and that. But when you now put in the word digital, the adjective digital, I think for me, that reflects, that indicates the fact that it is pushing education, especially for low-income people, on how to, to engage financial services institution through digital channels. Like it was highlighted by the keynote speaker, it involves trying as much as possible to support clients, especially low-income clients with relative lower level of education, to be able, to be a part of this, taking them through, some of the devices, empowering them to be able to do that. For me, I think this is important. It's not just about enabling them to access the financial services. I also look at some psychological dimension from our experience. If a poor, rather not very literate person is enabled, supported to be able to efficiently use digital channels, there's a sense of fulfillment, self-esteem, for such an individual. So that is my own idea of when you talk about financial digital literacy.
Thank you very much, Mr. Godwin. I think you've been able to break it apart, and I'm sure that those on the call are gleaning from the insights you're sharing. But one more question before we move to other members of the panel, and this is around your time. I mean, your leadership at LAPO, which is Life Above Poverty Organization. We know it has existed since 2007, and you also focused on getting people out of poverty. The question here would be, can you share some of your experiences and insights? So a lot of times when we say financial inclusion, people are not excluded, there's always the relatedness to those at the bottom of the pyramid. But really, based on your experiences and insights, how have some of those literacy initiatives, worked, especially amongst the low-income segments?
Yeah, thank you very much. This is quite interesting, and I want to indicate clearly that when we started, actually about more than 30 years ago, LAPO was put together in the late 1980s. The operating environment obviously different from what we have now, especially in the nature, of our clients, because as a poverty-focused entity, we are so determined using various eligibility criteria to be able to reach what we called the poorest of the poorest. They were set for that. So what you have therefore, what we have therefore was that you have a body of clients or customers who would definitely need two things. The first was credit, knowing that at that point, the microfinance practice was microcredit, a mono product, which was credit. And a more relevant need they require, it was the fact that they needed education. If you like, you have financial education. So in order to do two things, for us to be able to engage us meaningfully, knowing what we are and what LAPO is not, and more importantly, to be able to also manage their businesses. And what we therefore came off very early with was the pre-loan training. Pre-loan training was actually for about 6 weeks. And it is those 6 weeks that clients were required, to wait before accessing credit. And preload training, which was more like a financial education module, consisted of 2 segments. Segment 1, like I said earlier, was to understand what we do, how we do, and what are the processes. But in the other second segment was the micro business management training. It was cool because of the level of the education. It was quite innovative. What we wanted to take through was the fact that how do you borrow? And if you borrow, how do you use the money? How do you use your money? More or less like, how do you account for the usage of your money? Of course, the delivery methodology was not conventional, not like the conventional things we do. I remember at a point in time when you want to emphasize the need to be prudent, the need to properly manage your resources, we will cup our hands like this, our palm like this, and we said having money is like you pour water on this, and therefore you need to do everything possible to make sure that the water does not. So pre-loan training was a key element of our financial education. The second one, also related, was the micro business management training, which periodically we provide for our clients. But over time, things have evolved. You look at how things have evolved. About 12 years ago, Lift Above Poverty Organization, the NGO segment of LAPO, decided to implement a more structured financial literacy program, which they deliver to 2 segments. One, the clients of LAPO Microfinance Bank, and secondly, to communities where they carry out their own program. So this is moving from a point where we realized that financial education was imperative if we were to succeed, and then to where we are today when you talk about digital literacy.
Thank you very much, Mr. Godwin. I think one of the things you highlighted around the pre-loan training, I think it's quite key. It means you don't just build products, you also have to educate the people who will use the product, let them understand it, and it's part of the education as far as literacy is concerned. Thank you very much, Mr. Godwin. We'll move over to Mr. Femi Omogbenigun. Mr. Femi is the MD CEO of 3Line Card Services Limited. Mr. Femi, just dipping quickly into your bio, I know that you spearheaded the design of the first agent banking platform in Nigeria, and looking at perspectives in terms of literacy initiatives from the B2B and B2C perspectives, and how the whole block comes together. Could you share some of your findings? I mean, being the one to pioneer agent banking, which was one of the ways to drive financial inclusion, and then what were the things that came to you as surprise? Or when were those things that you found out and then you had to use innovation to drive and make better as far as financial inclusion is concerned?
All right, thanks very much, Paul. And it's so good to be here. Very interesting conversations so far. When we started out this, it was a case of understanding and seeing the huge gap between the unbanked and the underbanked. And the biggest part of it was, the access point at the time. And looking at it from a cost perspective, there was no point a bank having, and the banking structure, the way our banks are structured in Nigeria, you want to build a huge, bank branch and all of that. And I looked at my village and said, which bank would come here and then, erect this huge edifice for, maybe 1,000 people? They're never going to make money, and they will never come because it doesn't make any sense. Now, as a technology company, as a tech person, what can I do to create that access? And that's basically where the idea came from. So the idea was, these POS terminals that, we already have. At the time, ATMs were more common. And at the time, you could also pay bills on ATMs, which meant that some of these tools could actually do more than what they were currently being used for. And then, we did that market research. And part of it as well, when we were doing that market research, was that some of these people also don't want to engage with the banks because they just don't understand what it is. And there was even something that was very surprising when we conducted some research in Lagos, that a lot of the time, the interaction of some of the banked people with the ATMs were through the security guards that were at the ATM, because even people that had bank accounts could still not use the ATM. They still relied on the security guy to help them. How do I put my PIN? How do I do this? How do I do that? Which now made it very germane that if you have a platform where people can where you can personalize access to financial services, it would actually help encourage a lot of people, to use those services. So we pioneered that. We developed the platform, and we started out. So we started out basically focusing mainly on financial inclusion. It was extremely difficult because, of course, that financial inclusion is not profitable. So it was extremely, extremely difficult as a technology company, to drive the product and be profitable. So over time, we then realized that the best way, for us to drive this was to remain in the area where we have the competitive advantage and then have partnerships. And then we started to partner with banks, because for banks, they have very huge distribution network. Distribution was way easier than us trying to distribute. At the time, I remember you had some banks that already had like 300 branches, and it was easy for them to mandate each of their branches to create, 50 agents, 100 agents, and distribution just, became easy overnight. And the impact that we then saw was the fact that somebody could explain to you in your local language why you need that account and help you open that account, in your local language, have interactions, you can communicate easily. Some of our agents then used to even go to some of these people's houses to collect their money, to help them save. I remember one experience where, we opened an account for a particular customer, and immediately the customer deposited, he got an alert. He was extremely, extremely, extremely happy. He could trust the system. A card was issued to him immediately as well, and he was also able to withdraw the money. So he was able to deposit, he was able to withdraw, and he realized that, oh, this is extremely more secure than me putting the money in the house. So that has actually, that was basically what we set out to do. Of course, over time, a lot of this has changed. A lot of the agents now, I wouldn't say really do financial inclusion, is more of service points. Because if you look at agency banking in Nigeria now, it's more of service points, basically being leveraged mostly by the banks, where you just go there, you withdraw or you deposit and you move. So there's still a need to start to create financial inclusion on those platforms. Financial inclusion products on those platforms. Can I go to an agent and get, my Lapo loan? Everybody knows Lapo very easily. Can I go there and, do my thrift savings? Because till today, even though a lot of companies have tried to crack the traditional thrift model, they still haven't been able to achieve it. And I think there's a huge opportunity there if you're able to crack and digitalize the thrift model, because there's a huge, I think that is the foundation of the informal financial inclusion product, that is still being traditionally used today. And if we can bring that into this huge network of 1.3 million agents that have been built over time, we would actually see this changing.
Thank you. Thank you very much, Mr. Femi. You made a remarkable statement. You mentioned during that whole process of launching the agent banking platform, you noticed that even those customers who had ATMs still needed the security guards to help them. And I think that's a problem with digital literacy as well. And then you also highlighted that financial inclusion is not profitable. So in line with the theme we're looking at today, which is enhancing financial inclusion, what do you think we can do as, both as organizations and also, in terms of policy making, even all the way from the central bank to deal with this specific area? What can we do? One, to, maybe to educate, because if you have the ATM and you need somebody to teach you, like a security guard, to use it, then that's definitely a problem. And then two, being that it's not profitable, what can government do to support, and make it more, more attractive?
Okay, so from so the first one, from the literacy part of things, it's a reflection of our literacy level as a country. I think in Nigeria, statistics say that our literacy level hovers between 69 and 70% or thereabout. So you have 30%, that are not even literate at all. And even out of the 69, 70%, we know that majority, or maybe another 50% of those ones are also not, well read. So it becomes very difficult interacting with some of these systems. A lot of these systems are not localized, right? A lot of the interaction, is in English. When you go to the core north, where people hardly speak English, there are rumors that there are some schools that teach English in local language. So it becomes very difficult. So there's a need for government to even improve the literacy level. And then there's a need for us, service providers, to try and localize how customers interact with our systems, right? If I'm in a particular geographic location, can I make my mobile app in Yoruba, for instance? Today, you see a lot of banks, when you call their customer service, they would ask you to choose, how do you want to be spoken to? Do you want to be spoken to in English, in Yoruba, in Hausa, whatever? That's basically so that you can express yourself, a lot better. So we need to look at, from a technology perspective as well, how to localize that so that interaction becomes way easier. We also need to look at how to train a lot of these agents or the service providers to understand that they are not just in the business of just somebody has come to withdraw or to deposit, but to actually offer financial services so that people actually understand the benefits of being banked, right? Those guys interact with millions of people on a daily basis, but they've not been able to pass any knowledge to them. That is very important. We need to be able to get all of those agents to become change agents, to become educators, to educate customers that visit them every day. Oh, this is the essence of this. These are the benefits. Continue saving. Your bank would be able to give you a loan if you save for 3 months, if you do this, if you do that. Part of the problem is that the agents don't even know what they're doing. All they're just after is their daily bread, right? They don't understand the power that they have. They don't understand that these people that come to them, they can actually change their fortune. And while they are changing it, they are also making more money, right? Now, going to the second question around profitability, I think what can help solve that, which is basically what we ended up doing, is around collaboration, right? And I don't think one person can do all because we all have our different strengths. So for someone like us, Threeline, we're a technology company, right? We partner with a bank. What the bank is looking for is different from what a tech company is looking for. A bank is looking for float. A bank is looking for customers to give loans to, and all of that. Let us give the banks the technology, to be able to distribute, get their loans, get their customers, get their float, and let the banks, pay the tech company. Everybody gets profit, right? But where we started and we tried to do everything, it was only transaction income, and transaction income is actually so little if you look at the cost of operations and everything that you have to do. But when you take that to the bank, that cost becomes a fraction of, the total benefits or the total value chain, that the bank will get out of this. So it is actually collaboration. And then understanding where we all have a different competitive advantage and dipping it in each side. And we as service providers as well should not be afraid to invest, in this as long as we believe it. I think, Action is trying to do that now, leading the way. That's basically part of why we're having this conversation. We should invest more. to deepen this based on our competitive advantage and clearly designing and deciding on what side of the divide we want to play.
Thank you very much, Mr. Femi. Quite insightful. You highlighted collaboration, which is quite key. Thank you very much. Before we proceed to the next panelist, I'd like to welcome those who joined after the keynote address. We're currently on the panel of enhancing financial inclusion through digital financial literacy. That's the current discussion ongoing. The next panel session is on enhancing financial inclusion with products and services, digital products and services precisely, but we're yet to get to that. So it's been an interesting conversation. We've had the former managing director of LAPO. We've had the managing director of Freeline, and now we'll move on to the Chief Operating Officer and co-founder of Blue Salt Technologies, Mr. Adetokunbo Igilan. And thanks for joining the session as well, Mr. Adetokunbo. I know that Blue Salt Technologies, is trying to drive financial inclusion, especially, through ways and means of identity management. We know that that's also been part of what has affected how rapidly we're able to, get people, onboarded into financial systems. But I know that you've built the technology, you've built a robust platform. But what we'd like to hear from you is how has what you've done, as an organization and technology-wise, is able to drive financial inclusion, especially around the literacy, aspect. Could you shed more light on what you've done and how you've done it to enhance financial inclusion?
Yeah, thank you, Paul. Thanks for having me as well. We've been focused more broadly, even more broadly around onboarding and EIC, but we've also been focused on embedded finance as well. And our flavor of embedded finance is, how do we put these financial capabilities in the hands of people who traditionally do not have it, and that directly coincides with the people that are not financially that are financially excluded or underserved. So we have a product, we call it payment as a service, and when we try to drive this with some of our partners, because traditionally we're a B2B company, when we try to drive with some of our partners, some of the concerns that came to us, of course, is the fact that, look, how do we position this thing in the market? How do we, sort of like communicate these benefits? And that was when we understood that, even from that very point, from that very inception, there needed to be a clear understanding about how the engagement for the customer was going to happen. So ultimately, it's like digital literacy goes down to the fundamentals. So what we learned from that was, digital literacy needed to be a fundamental part of the product development process. It needed to be not something that you bolt on at the end, but actually part of your core considerations when you're thinking about this. And where we kind of what we kind of learned from that was, we needed to put the product management team, more focused around that, and I think Mr. Femi, mentioned stuff like that, actually getting out there and understanding who these propositions are for, and understanding how, to even communicate to them when this product is ready. So ultimately we had to, provide sort of like focused training for the product management teams around, how to enhance digital literacy, and, sort of like how to ensure that, the communication is very down to earth. So we had things like, the product having to change the entire product layout so that when we know that this person speaks broken, or broken is his preferred language, right? Then all of our communication would be in broken, So if he's getting his account balance, it's in broken. It just, it just kind of gets him closer to the product. He feels, you know, instead of saying, Mr. BC, I could say, Oga BC, you know, this is your balance today, this is your child, you know, just trying to make it as intimate as possible. So, you know, for us, ultimately, we're also seeing a lot of technology opportunities, like you know, in the space of generative AI, for example, and the opportunities that we can have with, you know, translating language, you know. So so we're at the point of experimenting with things like you know, if we know that your preferred language is Igbo, right, then we should be able to share all your communication in Igbo, right? And of course, to also be very data-centric and data-driven, to say, if you called customer service before and you said, I'd like to be engaged in Igbo, right? Why do you have to ask me that question every time? Or why is it that all my communication also does not reflect that preference, you know? So those are some of the things that that we are seeing, but luckily we are seeing a lot of opportunity in AI and automation, you know, because financial inclusion, cost has to be a major focus. Like Mr. Femi said, it is the real difficulty is, you know, around cost optimization, you know, being able to deliver these technologies at a cost that is lucrative and makes sense. If you don't get that, then you fall back to the problems that the banks have always had, which is the cost of delivering the service is too expensive to focus on the financially excluded or digitally excluded folks, right? So ultimately, we see a lot of opportunity now with technology that gives us the promise, you know, that we will be able to engage a lot of these technologies we're talking about cost effectively and be able to deliver these services to the end customer and still be able to turn a profit. So ultimately, we think it's about, you know, very deep, intimate customization and personalization, you know, and you know, using technology as much as possible to close that gap. I think that is the way we see it.
Thank you very much, Adetokunbo. Quite interesting perspectives you share. I think something quite striking about what you said is that digital literacy needs to be part of core considerations of products. It needs to now be embedded into the product development cycle. And I think that's really, really strong. And you mentioned something around focused training for product teams on how to enhance literacy. I think, you know, if we adapt that and build products with such mindsets, I think it just helps, you know, deal with such things that, you know, we call challenges today. You know, small changes, big effects, and very interesting perspective as well on the part of generative AI. To be interesting to see how we'll use that to crack the bone, you know, to put it that way. But you know, there's often something being said that while a lot of digitization is happening, that it's ending up causing more people to becoming, you know, to become more financially excluded. So we are digitizing, but it's still also creating a gap. Is this your experience, you know, in what you're doing? And if yes or no, you know, can you paint a picture of what it's looking like on your side?
Well, yeah, I mean, you have, it's a good point. Ultimately, you know, as we get more digital, so to speak, there's a tendency for the products to get more complex. There's a tendency, for example, for things to be more CPU or processing intensive. And the moment that happens also, you now alienate more people. Right. What we would be praying for is that, you know, we are able to sort out some of the economic challenges that face us as a country, and then we can ultimately get devices that are more capable. Because like for us, when we say payment as a service, you know, ultimately it's something that we initially built on a very robust digital platform, and it means that anyone accessing it has to have a smartphone, right? But ultimately, we know that that already alienates about 50% of the target, right? So ultimately is how do we now get, you know, small, maybe micro apps, things that can work on feature phones? How do we do something or do connections or do integrations that also work very well with USSD, SMS, you know, sometimes as a bridge, you know, to make sure that we do not alienate, you know, or we do not, and that also keeps us grounded. You know, sometimes it is the need to ensure that we're not moving too fast, right? And as a result, alienating maybe half of the base that we're trying to target, you know, because I think that's where the struggle is. But I must say it's a complex scenario. I'm not sure there's just one single way of solving these kind of problems.
All right, thank you very much, Mr. Adetokunbo. Very interesting.
My pleasure.
Yeah, before we round up the panel one discussion, I'd like to quickly introduce, just welcome rather, members of panel two that are already on the call, and just to announce to everyone that we have industry leaders, like I highlighted earlier, who are on the call. We have the group CEO and the founder of eTraza Global, Valentine Obi, on the session. We have Ella Hini, the CEO of Momo PSB, on the session as well. We have the co-founder and CEO of Indesina as well. And then we also have Dennis Munoz, the co-founder and CEO of Rubix, on the call. They will be taking the second panel session, which will be on enhancing financial inclusion and in terms of digital products and services that helps in enhance financial inclusion, right? So we'll do a video introduction before we bring them on board, but we'll go back now to conclude on our first panel session. And so as we wrap up, there are some questions we'd like to ask the panelists for session one, for panel one. And, you know, and this is around, what do you think that government can do? We say that customer education and market conduct are key tenets of customer protection and the development of an inclusive financial system. But how are we faring? It's clear to everybody that we're not where we need to be, and that's why the central bank, government agencies, and non-government organizations have been trying to push the tenets of financial inclusion. But from your perspectives, and I'll start with Mr. Godwin, do you think we are faring well? I know there's still work that needs to be done. What ways do you think government can support, you know, to drive this and so that we can really, really enhance financial inclusion? You're on mute, Mr. Godwin, sorry.
Sorry. Thank you so much. Yes, we've made some progress, but the reality is that there is still so much to be done. I think this is where we are discussing what various stakeholders, principally government and its agency, can do to promote financial inclusion. I would begin by saying that for government to get involved in promoting inclusive finance is not a matter of choice. And I think it's what the government should do for two reasons. One is the contribution to national economy. When you properly, adequately include people who were previously excluded from the financial system, you are mainstreaming them into the mainstream financial system and economic system, and they are able to make a contribution to that. And of course, they are able to also enhance the condition of their living. What should government do? I think the prime intervention of government and its agency, especially the Financial Regulatory Authority, is the instrumentality of policy. You know, coming up with policies that will support financial inclusion. Well, the microfinance policy, for instance, with the emergence of microfinance bank, we cannot deny the fact that has expanded the frontier of finance in the past 15 years or more. But there is still more to be done. Providing support for institutions with it. especially policies that will support, will regulate, but not strangulate the existing institution, that will support the existing institution to be able to reach out. I still also believe that there is so much government is doing in terms of reaching the ordinary people. We talked about the palliative or whatever they do. I believe that there could need for partnership with digital financial services, technology on one side, companies, and so financial institutions on one side, to integrate this into whatever intervention programs being carried out in communities. In the process of that, awareness will be created on digital finance, and that's also lead a possibility of adoption of those channels by the people. So I believe it's about policy intervention. It's also about integration of the digital financial system or channels into whatever they deliver to communities.
Thank you very much, Mr. Godwin. I think I picked something quite striking from what you said, policy intervention, which is quite key. Thank you very much. Mr. Femi, would like you to share your thoughts on the same as well.
Yeah, so as Mr. Godwin rightly said, in terms of government intervening in this, they don't have a choice. It needs to be done for several reasons. The level of financial exclusion that we have also kind of like relates to our GDP and so many things not being counted, because of course you cannot see the transactions that happen within that sector, right? I know they tried to do, quite a bit during possibly the 5, 6 years, or even since 2012 when the FSS, the financial inclusion document was released. But we saw huge impact when they took it seriously and they created SANEP. And we can actually see the impact of that and how, we've been able to grow that network to about 1.3. The intervention fund also actually helped to create that network. The investment, network providers were able to invest, and I think the second level now that there is distribution is now how to get the citizens to leverage that and to also encourage products. So I think what the government should be doing now is to law both the banks and fintechs to start to create products that people can now come to those locations to use. And then, of course, if we've been able to activate all of those locations, a lot of the intervention programs that the government is using, distributing it would be a piece of cake, because there is no local government in Nigeria today where you don't have agents. So technically, there's no local government in Nigeria today where there should actually be anybody that is financially excluded, because there are service points spread across the country. So what government should be pushing for now is more collaboration with the private sector that are driving all of this to increase, literacy, to fund development of some of these products, and for the awareness, to be doubled, and also create incentives so that these locations become more viable, become more active and more integral to the society.
Thank you very much, Mr. Femi. Thank you for that. Please, for those of us who have questions, please leave your questions. We'll take them all together in one sweep. Closing remarks as well from Adetokunbo on the same perspective of how we're faring and the kind of support we need from government as well.
I think just like Mr. Femi and Mr. Godwin have said, I think government's contribution in this space is not optional, is critical, in fact, in certain degree. I would just like to look at it perhaps from an emerging technology perspective, because I think government should be coming to do the things that individual institutions may not be able to do by themselves. So more or less fostering that community and bringing people together, and then providing maybe some of the critical infrastructure that that individual institutions may not be able to access. And I'll go back to what we spoke about in the generative AI space. For example, nobody is I don't know of anyone that is training models for African languages or Nigerian languages, to be specific. So when you do translation on these tools today, what you find is that they do it exceptionally well, or I won't say exceptionally well, they do it well, right? But you can see the promise of the technology, but you can see that this is not good enough for a product, especially a financial service product. There's still so much gap, right? But I can guarantee that there is no one that is trying to solve that problem, right? Because this is a local problem to us in Nigeria. And I don't think we have enough AI organizations that have the kind of scale and the kind of resources required to do that. And more importantly is the data. The data is actually sitting with all of the service providers, the banks, the telcos. They have a huge amount of customer service data that can be used to train models, right? And of course, there are data privacy concerns and there are challenges, bringing all of that together. I think that is the kind of complex problem that I think government can attempt to solve. And if they solve that and we're able to create models that allow us to translate, so if Mr. X is from a place in the north that, maybe only 20,000 people speak that language, he can be addressed, so that way we completely break these barriers. We use technology to completely break these barriers. I mean, I think it's a kind of problem that government should be looking to solve. Yeah.
Thank you very much, Mr. Adetokunbo. That's an interesting perspective, and we believe that it will find its way to government and policymakers, and we will do our part to support that as well. Thank you very much to all Panel One members. I'd like to say a big thank you to Dr. Godwin Ehigiamuso, the Group CEO of LAPO, to Mr. Femi Omogbenigun, the CEO of 3Line, and also to Adetokunbo Igola, the co-founder and COO of Blue Sox Technologies. Thank you all very much for your time. It's been an interesting session, and we'd like you to stay on the call because we'll go into the QA session after panel 2 so that you can support with some of the questions that our attendees may have. So thanks to everyone who have stayed on the call so far. We appreciate your presence on the call. We will now move into the second panel session. It's also like the first panel session. It's going to be an interesting one. This time, we're looking at how we enhance financial inclusion, but with digital products and services. In the first panel session, we've looked at how we enhance financial inclusion with digital financial literacy. These, are two worlds that need to come together if we truly succeed, in driving financial inclusion. And so, ladies and gentlemen, I'd like to welcome the panel 2 speakers. And we will start with a video introduction of all panel members, including the moderator as well. Studio, please roll out the video introductions.
Meet our sensational moderator for panel 2, Yvonne Johnson. Yvonne is the co-founder and CEO of Indecina, a fintech infrastructure startup. Yvonne is a strategic thinker with over a decade of leadership experience supporting executive management on strategy with a demonstrated ability to influence change by leveraging innovative solutions within financial services. Yvonne has many accolades in her name. She is an early-stage investor and advisor in Pan-African technology startups, notably Adela and Flutterwaves. Dr. Valentine Obi is the founder and group CEO of eTransfer Global. He is a distinguished figure in the world of technology and entrepreneurship, recognized for his pivotal role in revolutionizing Africa's digital payment landscape across the continent, being at the forefront of delivering innovative electronic payments and mobile banking solutions across the continent. Dr. Obi's list of accolades is extensive. He established Excel Incorporated, a cutting-edge neobank based in London, setting the stage for a groundbreaking journey into the digital banking sector. Dennis Monette. Dennis is the co-founder and CEO of Rubix, a cloud lending platform. Rubix is the only digital credit platform that provides lenders in emerging markets with accelerated growth through profitable loan products tailored to the behavior of informal borrowers. Our remarkable panelist, Eli Heney. Eli is the Chief Executive Officer of Momo Payment Service Bank Limited, the fintech subsidiary of MTN Nigeria. He is a chartered marketer with over 20 years of experience and has held leadership positions in Unilever Ghana Limited and the Coca-Cola Bottling Company. He was instrumental in setting up mobile money services in Ghana and growing the business over the years through strategic partnership, business development, stakeholder management, and innovation. Ladies and gentlemen, a standing ovation for our distinguished panelists.
All right, thank you very much. At this point, I'll hand over to the moderator of the panel 2 session. That's Yvonne Johnson, the co-founder and CEO of Indecina. Over to you, Yvonne.
Thank you, Paul. Really excited to be here. Very grateful, and thank you to the Axion team, the board, Mr. Joda, for this exciting session. It's been really interesting so far. We've learned a lot. Coming from the first panel, we actually covered what the ecosystem has done in terms of building a mature distribution network. Mr. Femi made a good point about how that has also evolved. And of course, really deep dived into the required digital literacy needed to drive, customer adoption of the network. And so what we're going to focus on this panel, the second panel, is really now look at the actual digital products that we're offering, right? And so what we're going to do is cover things like product design, customer experience, all of what is required to really drive economic inclusion. I'm very excited here to moderate this panel. And so we'll just jump right into it. And Mr. Obi, I want to start with you, just given your context. And I think my first question would be to say, in your experience in the last 2 decades, and let's kind of focus on the Nigerian digital financial services industry, what has really inspired you the most, right? When we talk about, the products that have been offered to these customers, the experience that they've had, and, just the real impacts that we've been able to make around economic inclusion. What would you say has been kind of the most inspiring for you? You're on mute.
Great. You can hear me now?
Yes, we can hear you. Please go ahead.
All right, thank you. Thank you, everyone. Quite an exciting panel. And yes, Yvonne, to answer your question, one thing that is inspiring for me is to see what is happening today in the Nigerian digital financial system. When we started 2003, it was quite bleak. I remember going to the central bank, then in Marina, and telling them about what we're trying to do to enable payments over the mobile phone. And I remember the director, after listening to me, walked me out of his office politely because he just didn't understand where we're coming from. And I can understand, because that wasn't the norm. People were still trying to learn how to use the mobile phones to make calls, and I wanted to use it to make transactions. So it was interesting. But look at it today, that by 2008, eTransact became the first mobile payment platform on the App Store in August 2008. And we look at today and we see a lot of young folks, a lot of digital platforms, some of them actually using eTransact to launch to launch their businesses. It's fantastic and also to look at the central bank. Today, though it took them about 8 years, until 2012, when they, licensed the first mobile money operators, But it is heartwarming to see that it works, that the vision is indeed real. And today, everybody is talking about mobile. Mobile payment is what everybody's doing. There's no bank today that's got a digital platform that is not going to have mobile, And for me, I think it is heartwarming. But importantly also is to see something, because when we enter the market, Nigeria is still heavily underbanked. But then we had, in a country of about 200 million, less than 20 million people with bank accounts. Less than 20% have actual bank accounts. And if you go and look at that 20%, people like you and I then have more than 2 accounts. So when you counted the numbers, so sometimes it can be deceptive in terms of, so glad to see today that we are nearly about 40% of the population from different angles, having bank accounts, and having one kind of digital account or the other, not just bank accounts. So for me, that's inspiring. When in those days whereby you need to do any transaction, remember, you want to buy a car, you have to go with cash. The whole amount to pay with cash. You want to buy a house, you have to pay with cash. And our plan was change that that kind of behavior, and it did work. And today we can see people can now actually transfer. You can even go to a restaurant, and instead of paying with a card, you can just transfer money from your phone into the account. So those are the things that are inspiring us. Were we discouraged at the time? Yes, but we also believed in the vision. We knew that this is the way to go, and this is how we're going to go. Because remember, in 2003, you sent an SMS, it comes back to you the next day. Do you remember? You'll be sleeping in the night and then start dropping in. But we know that it's going to change, and it has changed. We had no, the GPRS wasn't working properly, so you can even design product with a proper look and feel. So everything is text-based, but it is good to see that it has changed, not just in Nigeria, across Africa and across the globe. And the truth of the matter is that when it comes to digital financial system, Nigeria is actually leading the pack. Because I remember making a presentation to Barclays in 2008 with an app we designed for Barclays Bank, and they just didn't understand it. Mind you, that was started, instant transfers in Nigeria in 2003. Faster payment came up in the UK about 6 years or after that later. So for me, those are the things that inspires me to know that we are trying to make a change, and the change, you can see it, it's visible, and people can relate to it.
Thank you very much. That's actually inspiring, because I can imagine it was tough during those times. Let me switch to Mr. Eli Hine, because Mr. Obi talked about, his original vision, going to see the regulator was about how mobile was actually a viable platform. They didn't see it at the time, but he persisted, and here we are, right? Because what we found is that, that mobile platform has been, that was kind of, some sort of a magic channel, right? And your experience with mobile money, and specifically coming from the telco angle, my question is that, mobile money has been, a big catalyst in accelerating digital financial inclusion, right? We've all heard the stories, especially outside of Nigeria. Can you share specific product examples just to explain the success? Just so that, we can kind of get our heads around what the magic of mobile was, on the continent, and, just really making it a very successful channel, for delivering digital financial services.
Look, thank you very much, Yvonne, and thanks for, me on the panel. I think you started with the mobile as a channel to offer digital financial services, and we all can see the impact that mobile has had. And it's also because mobile, in terms of access, provided a lot of opportunity at the time, because a lot of people had mobile phones, whichever format they had, whether it was the basic or the feature or the smartphone. And so that channel and the level of access it provided was a launch pad for opportunities to provide financial solutions. And that is how we looked at it. And I think Mr. Obi, alluded to the fact that bank accounts at the time were fewer. And therefore, even when it came to providing access, there were issues around, providing bank locations within certain communities because it just didn't bring the right level of investment case for banks to spread themselves. And mobile provided that level and distribution opportunities as well. Those initial, advantages of the mobile and the distribution provided the basis for mobile as a channel to deliver financial solution. When it comes to the products, there was an initial, submission, and I listened to the fact that people needed to trust, these channel as well. So the ability to open your wallet, making sure that KYC was not extensive, that became a barrier. So the basic KYC that people needed to provide, and I think leveraging on that also ensured that many people could open wallets, and providing the distribution infrastructure that allowed people to access the service through the agency model or the agent network that was built was also very important because you needed to make sure that people could access the services within their communities and they didn't have to do long travels. The other bit of it is also the fact that if they put money onto their wallet, they are also able to take the money out. So that demonstration that if my money goes in, it can come out was also very important for customers to believe and to trust that my money is not going away versus keeping it under my pillow or in my room. And that built it. From those initial phases of, first of all, KYC, removing the KYC barrier, making sure that people could open their wallet quickly and easily, and ensuring that transparency around service trust, where money can go in and come out easily, and they can testify to that. Then, propelled us into the other services. And one of the key services that caught on very well is the person-to-person transfer, because it was easy to demonstrate. Because once two wallets were open, you send money to the other person, you send the money back to you. And that sort of built the trust around, movement of money. And then on P2P, we built a lot of progress in terms of service delivery, and most people just needed to move money around. And therefore, if he could fund their wallet and move that money across to the next person who was several miles away, you have satisfied a big need, which before would have required either giving the money to a transport person or a driver who was going towards that direction. And sometimes the person may get there and may not even deliver the money. And the cost of some of those transactions were also expensive if you gave it through those channels. And these channels provided opportunities for that to be delivered at a much lower cost. And therefore, cost to serve was also important in the delivery of the service. And therefore, people caught on very well with the person-to-person. And then we transitioned from that into payments. But payments were also a factor of person-to-person, because some of those retail payments were actually person-to-person transactions, because they were small amounts that were being transferred. So to dovetail that into payment and merchant payment was easy, because people had experienced the person-to-person experience. And then, of course, we started looking at remittances as well. And most recently, when we started getting the collaboration with banks, we introduced savings and credit products where people could borrow money as a result of their transactional activity. All these were delivered, at a more efficient level in terms of what the traditional banks could have delivered. So just to highlight a few, these were the progress that delivered the experiences that we see today and the adoption. All this, was built through a very robust distribution. Remember that the telcos came with a very strong distribution and understood how to deliver mass market distribution efficiency. And then, of course, the technology that came with it that delivered the kind of efficiency that we needed. And the last bit is the customer experience side, which I touched on from the beginning, to trust these platforms to deliver financial solutions to them.
Thank you. That's very important. I think you made a good point about cost to serve, because I think even the economics of the products is important. So I'll definitely want to touch on that, later in the panel. But Dennis, let's hear from you. I mean, especially kind of in the work that you do, I know you're really focused on kind of the SMEs and the micro SMEs, right? But I know that your firm is also very, very particular about, kind of customer-centric design. And so help us understand some of the insights, right? When you think about customer-centric design, user experience, really in making sure that these digital products and services have kind of high adoption, accessibility is also something that we've talked about. I mean, are there kind of specific insights and learnings that you can share with us?
Yeah, thank you, Yvonne. Just to jump on what was just said here, the economics also very quickly to make that transition. I think I want to take the opportunity to reflect on the fact that initially, the very first, many years ago, when we started introducing digital in services in general, not just financial services, the big motivation was also to at the time was to lower the cost, right? So the idea, if you look at digital self-check-in when you take a flight, it's not really the first idea was not to make it so much more convenient for the passenger than it was to save costs. So what I want to say here is that we have to reflect on that too, that now we found it so convenient that we even have this seminar to talk about how it can increase financial inclusion, right? So we're starting from many years ago where these kind of digital technology were there to just lower the cost of service. And now we also thinking, it has the potential of actually increasing financial inclusion. But I think this requires us to think about that a minute when we deploy this technology. Say, okay, am I trying just to take a technology and lower my costs, or am I actually trying to, am I okay to keep some additional costs just for the sake of making that technology do something else than lower my cost as a provider, right? And I think, we here to say that it's important for creating trust, for creating adoption also from people, but then it is very different than just saying it's there to lower the cost. And definitely that's where the product design and the user-centric design become very important. That technology we've understood years ago now, that if you also design it well, if you listen to the customer, then you are able to use that technology. But only if you do that, you're able to use that technology to increase the satisfaction, to increase the financial inclusion. So we talked about local language, we talked about literacy. I live in Senegal, I have seen this company who took very, very quickly took a large market share of the mobile payments with a very simple app that would speak to everybody, that you could be also part of the system without having a smartphone, just with having a QR code printed on your card, that was having also, just like WhatsApp, instead of reading, you could just play a vocal note that would explain what the app was doing. So not everything was based on something written, but also played local language. So it's really about thinking. To me, it boils down, the good product design boils down to looking at how does it work in the informal market? What are the practices that are extremely popular in informal market, and how does it work in informal market, right? What are these things that people adopt, even if it's not financial services? Like typically these vocal notes are an inspiration from WhatsApp. People send WhatsApp, but a lot of people send vocal notes on WhatsApp because it's easier to read, to write, and to listen to than to read. So adopting these kind of ideas to also embed this into the product is quite important. So also we talked about people like very often to be able to fall down on a human being if you have a problem. So I think those successful apps are those also where we haven't underinvested in the customer support, that I can take the phone, call, and talk with a human being who knows my product, who knows my account, and is able to provide me with a reassuring kind of support, right? So these hybrid model where it's also we're not only looking at the tech, but we're looking at the whole experience of how do I get trust, are very, very important, in particular when you're talking about digital lending, which is somehow also even more stressful in the first place than to do a small transaction. If I send a small amount of money, maybe I'm a little bit less stressed than if I subscribe to a loan I'm going to have to repay in the next 10 months or something like that.
Awesome. No, thank you so much. That's very important. And one thing that we're hearing, and we heard a lot about in the first panel, was about trust, and that definitely seems unique to our environment. Eli, let me go back to you and just again, just Nigeria specific, right? Especially since you have a lot of the experience on the continent. When we think about Nigeria, and Mr. Obi actually alluded to it, our digital payments mix is actually evolving very fast. Some people could actually describe it as very fragmented, right? If you think about alternative non-card payment options, those are really growing, right? And so for someone like you, again, coming to Nigeria specifically, with MTN Momo, we all know kind of, the history in terms of, how long it took, for the regulator to allow the kind of telcos come in. You look at all of that. How do you navigate all of that? And what are the right products, to build, right? Considering all of that, right? For lack of a better word, the late start, the evolving and fragmented, digital financial services space in Nigeria.
Look, thank you very much. You touched on regulation, and just a little comment around the earlier submissions in the first panel, and this conversation, which speaks to collaboration and trying to leverage the strength of the individual players in the ecosystem is very important. And I think that the regulation should look at that going forward in terms of how they support the fintechs and payment service banks like us to be able to provide more support within financial service delivery within this economy. Most of what you find is the fact that there's still that what I would call competitive focus in a lot of the things that happens, and we are losing the opportunity to collaborate and do more for this industry, and we are not leveraging our strengths very well. So just a comment to make, and it's part of everything else we need to do within this industry to make it thrive and become better and better, leveraging on the experiences and competences of the various industry players. Now back to navigating this industry. I see a lot of work has been done by the banks, and a lot of it has gone into the card rails in particular, and with the mobile now coming, there is the need to look at how the mobile can bring a lot more efficiencies within the financial ecosystem. And two things I would highlight quickly. The first one is a submission that was made earlier. I think Femi touched on it. Today, if you look at the way our agents are set up, they are very transactional. And so the agent can't do more than just performing a transaction if you want to take money out of your wallet or do something. Our agents have not been set up to provide financial education to our customers. And it's a powerful opportunity to leverage that. And I think it's one of the things that will help us improve on the service offering to customers. Service offering with financial services also touches a lot on relationship and relational activity, and not too much, the transactional part, which leaves a lot of, opportunity to customer education and customer trust building and understanding. So that's one of the things that I think that the model should look at and change. And we are looking at how we can transform the agency model to provide more than just transactional support to customers and provide education. Then the other one is the issue of leveraging product innovation. Because things around the experiences that customers have with service offering, how easy it is for the customer to access the service. We've talked a lot about a lot of the people not having, the financial literacy to be able to access services. So what are opportunities around enabling customers to use facial recognition, for instance, to perform a transaction instead of having to remember their PIN, things like that. And those technologies are coming, and over time, we should be able to leverage those to execute financial transaction. Then there's also the whole conversation around financial literacy and customer education, which makes the customer understand better the service that are being offered and be able to, make a decision on which service or which other service, provides opportunity for them to access financial service. Because the whole idea of inclusion is also empowerment. You are trying to empower people to make financial decisions that would improve their well-being. For instance, products like savings and credit products that allow the retailer in the rural community to borrow some money because of their transactional activity would help that person to get access to loans at a much cheaper rate than what they find today in their market. Because in the ordinary state, when that retailer is going to get money today, because there's no history and no backing, the cost of capital is very high. And for them to turn that capital around and make money and pay back, sometimes there is the difficulty in making returns and paying back, and that challenges, their ability to expand their operations. But with the technology that allows for using their data and their activity, to leverage, an opportunity for them to take loans at a much cheaper rate, that provides that opportunity for that retailer to do business and do business much better. Then issues around pension products, because there's a lot of opportunity within informal pensions. Today, the formal environment is well provided for, but how do we address opportunities within the informal sector for pensions like that? So people work and can put money away, and when they are unable to provide that money back, they can have something that supports them. So those are the things that I see as opportunities within the ecosystem today, starting first of all in terms of where the service is delivered using our agency model to be able to provide more to the customer than just transactional support today. Thank you.
For sure. No, thank you so much. And I know we're running against time, but I just want to squeeze in two quick questions. Mr. Obi, it's funny you talked about how Nigeria is really leading the pack. And I remember how stunned I was when, kind of instant transfer, especially with things like name resolution, was like magic. When the US launched Zelle, I was reading about kind of all the fraud that was happening. I was like, well, why don't they have this? We already have it, right? And you talked about that, right? And so, my question then becomes, because I know that particular quirk about, name resolution with our NIP was, really driven from the regulatory angle. And so my quick question would be like, when you think about the regulator, especially with, how far we've come, what do you think they should be thinking about in terms of, more of this kind of, positive impact in terms of the products we're delivering to customers?
First, I'd like to say that, well, I want to give first kudos to the Lamido Sanusi administration. because they actually helped a lot in getting the regulation in place for digital finance services in Nigeria. The cashless policy that they started, actually kind of motivated and propelled digital financial transactions in the country. And then licensing of, at that point, about 16 mobile money operators. That. So you talked about the issues of fraud, right, Yvonne? Fraud. And what we have is a situation whereby, at least within the Nigerian context, the transaction flow from one individual to the other is known. And there's a lot that still needs to be done, like what they call dynamic linking, that the regulators can begin to think about, how to have almost like a certificate authority that enables transaction to flow and link properly, so that you don't have things like man-in-the-middle attack, some of the things that you had in the US and the rest of that. In the UK, they have already incorporated dynamic linking in the UK. Though not everybody's doing it, but I think it's one of the products, one of the solutions that can help limit that. We've sent a couple of position papers to the central bank, to regulators, to look and review and see how they can use this to help with transaction within the country. But be it as it may, I think that because of the way we are structured and because of the way our banks and our networks are, there will be those kind of things, but it will be limited. Because if you're doing within the financial system, within the bank, for example, the BVN is already something that is there that makes it almost impossible to run away if you are doing any transaction that is fraudulent. Not that it cannot happen, it can happen, but that is there. Now, if you look at when you're doing transactions and you have the name inquiry, this you don't find that, for example, in the US. UK just started this just about, I think, this year, whereby you can actually know who you're transferring to before you do the transaction. In Nigeria, it has always been there from day one. So indeed, there have been a couple of things done that is, and those foundations are good, and we can just continue to increase on that, advance on those particular areas. So indeed, it is working. There are still, of course, lots of improvement that can be done. But one thing that is interesting is that first is that the regulators have laid a good foundation, now for them to begin to build on it. And
for sure.
Also the stakeholders themselves, the various fintechs, they also recognize this because it is in their interest to ensure that transactions within their network is fraud-proof, so they can continue to encourage people to continue to use it. If people get disconcerted, get disenchanted and become lethargic about the issues of security, then it becomes a problem for them. So that is why I believe that the fintech world, everybody's working to make sure that transaction indeed, as much as possible, is fraud-proof.
Awesome. Thank you so much. So now we're running out of time. Dennis, I'll just give you a quick last word. Maybe just talk about kind of products and services specifically to kind of MSMEs, because I know that you deal with them a lot. Just kind of last words.
Yeah, no, maybe if we don't have much time, maybe I prefer to take an example to say we have to challenge ourselves to to all our bad practice or the things we do, because it's always been like that, as bankers and as lenders. I think almost everywhere in the world, if you want to borrow and you say, I want 100, then they approve you 100, you will end up having on your account 100, maybe 99 or 98, a little bit less because disbursement commission has been taken. And I think we always meet this situation, and always we try to challenge that and say, no, a customer is asking for 100. Maybe we should turn our product around so the customer gets 100. Why should a customer say, I asked for 100 and then I'm fine. You guys are bankers. It's normal. I get 98. No, it's not normal. There's many ways. Even I'm not saying you should take interest on the commission or this kind of back practice. You can just push these fees to later. So that when someone asks a banker 100, he gets 100. No, and I think we don't have much time, so I'm going to stay there. But I want you to reflect on that and say, yeah, are we able to actually do things simple, forget about our centuries of financial services practice and our accounting and our CFO requirements for product, or can we do something that is simple for people, is to the point, and really helps, right? Thanks.
Yeah, no, it's a very good point, and it really talks about kind of product design. Now, thank you so much to the panelists. Really insightful discussion, and I will pass it on to Paul at this point.
Thank you very much, Yvonne. I think that was a really good one, and the insight from Dr. Valentine B and Dennis and also Eli were quite, what I'll say, heavy. I mean, very strong. They came quite strong in terms of visibility into what's happening in the industry, visibility into what even needs to be done, and things that policymakers need to look at. Very importantly, it was good to hear Dr. Valentine mention how they've even made submissions to the central bank on, some of these initiatives that can turn things around, which is quite good. We really appreciate the entire members of panel 2 for that session. Thank you, Yvonne, for a well-rounded coordination in terms of getting insights and information from the panelists. Thank you very much, Dr. Valentine. Thank you very much, Mr. Eli, and also Mr. Dennis. Thank you very much. At this point, we'll move into the Q&A session, but just before we go into the Q&A session, would like to quickly pull up a poll so that we can get responses, and then while that is ongoing, we will take the questions. And would like all panel members to remain on the call because we'd like you to support with responding to the questions that we have. So studio, please go ahead and launch the poll while we go ahead with the Q&A. All right, so while that is ongoing, we have the poll on the screen now. Just a few questions. What we want to achieve with this is just to get the pulse of everyone on the call who is listening, in terms of if you found the seminar useful, if you've got certain information that you think will make sense for you, and what you do in a particular industry you work in along the financial services sector. So please just quickly take the toll. I think 10 questions, multiple choice, just yes, no, and then we'll be done with that. So we'll go to the Q&A session. Now we have quite a number of questions on the Q&A chat section or on Zoom right here, and I'll take time to read them out, and I'll call on the panel members to support with the responses. The first one is from Antonio. Antonio is from Philippines. We had people from around the world who joined this session. Antonio mentions that he's looking for financial support to establish his microfinance organization and empowering his members, who I presume to be his customers. So I'd like to pick on someone from panel 1 to provide insights on that. We also will send details to Antonio from our side on how to guide on this. But just to present it for the benefit of every other person that's on the call, let me call on the MD, the Group CEO of Lapo Microfinance Bank, Mr. Godwin, to help with this question.
Yeah. Okay. Thank you. If I get the question correctly, okay. I hope I get the question correctly. Just a moment, I'm trying to go on. It's not coming. Okay, good. I got the question correctly. He intends to set up a microfinance institution or bank according to our regulation. to provide services in Nigeria. That's it? That's the question.
In Philippines, he said it's based in Philippines.
You want to do it in Philippines?
Yes.
Okay. I don't know what the regulatory environment is in that country. I think generally there is need to look at the niche in the market over there. There is need to also quickly also decide what type of institution you want to set up. I do also know that in Philippines, there is also a non-profit platform to set up a microfinance institution. And of course, they could also have a regulatory environment to set up regulated financial institution. Where the need for partnership has been highlighted, I think, in both panels, that there is need for partnership. Again, I would recommend that for him, partnering with a technology company to be able to deliver the financial services. As with my limited knowledge of what the environment is, I think this is what at the moment I can suggest.
All right, thank you. Thank you very much for that. I'm sure Antonio has gotten it quite clearly. Antonio, if you need more information, our team will also reach out to you from the chat box as well. We'll go to the next question, which is from an anonymous attendee. And this question is there any policy by the government mandating a particular proportion or percentage of micro loan given strictly to market women to give financial institutions and government power to control price of goods at the lowest level to avoid inflation and encourage discount sale of perishable items before they become consumable, that throws the people at the lowest stream of the economy extremely off balance? Again, I think this is more related to to Mr. Godwin. So
yes, I do not think we have those policy. Truly, at the time of formulation of the microfinance policy, I was actively involved. They were all pushed for different things, especially there was, this push for having a certain percentage of whatever portfolio, institution portfolio dedicated or reserved for women and also for rural dwellers. Obviously did not scale through. It just went with a sort of a statement that microfinance banks or microfinance banks that will come on stream based on that policy should prioritize providing financial services to women. I do not also know of the issue of, supporting perishable goods and all that, but I think this is the position today in Nigeria.
Thank you, Mr. Godwin. We'll go to the next question. This one is from Simon Iderinola, and I think it's more suited for Femi and is related to what Femi, the CEO of Three Line Card Management, spoke about. And the question is, I hear financial inclusion in itself is not a profitable venture for a commercial institution. Thus, the call for government to lead it. CBN's latest circular on all Tier 1 accounts having BVN and NIN as a requirement seems an attempt to return the bar that was lowered for inclusion. How huge a cost has this growing space on bank and fintech fraud been for this experiment? Femi, would like you to respond to this.
I mean, the circular that the CBN shared, I think it's in the right direction, right? You cannot be processing transactions without knowing who is initiating the transactions. You can't monitor, you don't know where those transactions are going, where they're coming from, you don't know who is initiating. So I think at the minimum, identity is very key, to payment processing, so that where there is a fraud or where there are issues, you know who to hold. There are a lot of wallets today that one person has opened multiple wallets, especially when you look at the virtual accounts that people use today, and they use it to scam a lot of people. You get people sending you account number of Coca-Cola, Nestle, and all of those funny things. They can use those names to just create accounts. Somebody can create an account in my name to defraud everybody on my WhatsApp group, right? I mean, on my WhatsApp, right? So having identity tied to each account is the minimum that we need to do. So that's actually in the right direction. I don't think we need to look at it from what the cost would be to the ecosystem. I think it's the sanitization that is required, and it is necessary, you know, to curb fraud. Because if you look at people who have been defrauded, you would then know that it is a big problem, and that needs to happen. And us also ensuring that payments have identity tied to them actually allows us to start to create better products. So I can confidently give you a loan, and I know that I can share the data. I know that Femi is Femi all across the payment ecosystem because there is a unique identifier identifying me as a person. That would ensure that I cannot go to Axion, take a loan, not pay the loan, and then tomorrow instead of calling myself Olorun Femi here, I go to Lapo, I call myself Femi as a different person, I take the same loan, and then I'm shopping myself around and then defrauding institutions with collecting money from them. I'm not paying back. So there are a lot of people like that. So tying this identity is actually going to curb that, and we cannot look at it from, oh, how is that going to affect financial inclusion? We have not done it correctly in the past. Today, the federal government is saying, oh, we want to pay social intervention funds, benefits. And they're finding it difficult to uniquely identify the people that they want to pay these monies to. Why? Because you just get databases that just have people's name. There's no unique reference or unique identifier identifying them as one person, right? And then the next thing you would hear is that, oh, there was a lot of fraud in the program. We don't know who got the money and all of that. You cannot know who got the money because there was no identity. So this is actually very important.
Thank you very much, Mr. Femi. Thanks for covering that. So there's one question that is jointly for Dr. Valentine and Ini. It's in two parts, and it's from Simon Aderinola. I'll just read it, and then I think Dr. Valentine will take the first part, and then the second part will be taken by Ini. So the question is, some NGRO mobile money deployments, in some Nigerian mobile money deployments, the pushback seen have been based on much higher customer comfort with banks' trust equity as holders of their funds versus a newly licensed MMO brand. Question one, does calling these approved store value accounts the name wallets rather than accounts do a disservice to uptake of digital financial services from non-bank FIs? And then the second question is, with MTN positioning as a fintech, what do you see the Nigerian landscape looking like in 5 years in terms of where the majority of customers will be, bank, fintech, or outside the financial system, and what factors will be the drivers for that trend? So let me take the question again for clarity. It says, in some Nigerian mobile money deployments, the pushback seen have been based on much higher customer comfort with banks, which you refer to as trust equity, as holders of their funds versus a newly licensed MMO brand. The first question is, does calling these approved stored value accounts the name wallets rather than accounts do a disservice to uptake of digital financial services from non-bank financial institutions? That's the one for Dr. Valentine.
So the question I'm trying to understand, whether the wallet or account is issued, the wallet, the name wallet or account?
Yeah, I think he seems to, want to ask if naming some accounts as wallets as against accounts which you have in a traditional or commercial bank setting is not doing a disservice to the uptake of digital financial services.
Yes. No, I think generally, from my point of view, I think it's better we just call it account instead of calling it wallet. Because what happens also, you're looking at the cycle of people. You're telling them wallet, so they look at it as something lower than having an account. At the end of the day, they are all deposit taking. So they are all deposit accounts. So it should actually be called accounts. I know that in some jurisdiction also, they try to limit, even though they are not banks, even though they are just MMO, but they're actually keeping account for those customers. So in my opinion, and my advice would be to regulators, look, they should allow them to be called accounts, because the account, they just, what's the difference? Actually having a wallet, having an account is basically having, is an account where you hold your money and then you can transact from it.
Absolutely. Thank you, Dr. Val. The second question is for Hini, and it says, with MTN positioning as a fintech, what do you see the Nigerian landscape looking like in 5 years in terms of where the majority of customers will be, bank, fintech, outside the financial system, and what factors will be the drivers for that trend?
Well, thank you. Look, the whole conversation around what we bring as a payment service bank for the rest of the other fintechs that have been licensed and mobile money providers is to fill in the gap that exists today. I think we've highlighted the fact that the banks are structured to provide service up to a certain point. The way their business model works, there's just some level of retail it cannot address, and that opportunity is what the likes of Momo PSB and the others fintechs provide, and that allows the rest of the community, whether underserved or unserved, are able to also participate. Like I mentioned, the whole what I'll call opportunity here is people are able to be served in the deep rural communities because we leverage on strong distribution and agency or agent network that allows customers to interface with the service and provide, service offering to our customers. And then the fact that the mobile affords us opportunity to also reach a lot of the places that traditional banking is not able to reach because of the way it's modeled. So essentially what happens is those people now can participate. And once they participate, whatever monies that would have sat in people's homes under their beds are all brought into the financial ecosystem. That becomes available to everybody. Today, our float is held in the deposit money banks, and therefore that also offers opportunity within that space as well for more float to come in and for that to be offered back to customers in terms of micro loans or credits. So I see, an industry that is, more supported. I see an industry that offers diverse products and services to the wider and everybody within the country. So everybody gets included, everybody can access one financial service or the other. So I don't see winners or losers. I see the system itself providing more to customers, and everybody can access one financial service or the other using the different financial service providers that are available and leveraging our strength to offer more innovative products to customers. And I think the conversation around what the fintechs are offering as value-added services, which the banks can offer to their customers, also adds to the value addition overall. So that's how I see it. A financial service ecosystem that is more efficient, that penetrates to reach the wider populace and offers financial intermediation to everybody who has an interest in taking one financial solution or the other. Thank you.
Thank you very much, Ini. We have a question from Prosper the Great, and he's asking, did Microfinance Bank have any, or let me put it correctly, does microfinance banking have any limitation on digital and agent banking in terms of operation? I would like to call on Dennis, CEO of Rubix, if you'd like to take this.
Sorry, any limitations that microfinance have in agent banking? In terms of, the question is in terms of the regulation?
No, it just says, does microfinance banking have any limitation on digital and agency banking in terms of operation?
Yeah, no, I think in terms of operations, so I will not speak about Nigerian regulation. I'm definitely not the right person to speak about that, but I would definitely say that this is really the future of microfinance. I believe is that the distribution channel are evolving a lot. So definitely the first generation of new distribution channels for microfinance were agents. You have a large agent network. You're able to distribute your product and services through agents. And what we're seeing now, and I think that's actually what Rubik is actually currently focused really on, is the possibility to distribute the product on platforms without necessarily going straight to physical agent networks, but thinking rather about platforms. And I don't use payment platforms on purpose because I think it's broader and it's wider than that. If you think about marketplaces where sellers that are using the marketplace, SMEs are using the marketplace to sell, distribute their products, then these platforms actually capture a lot of very interesting data. They are SMEs, so they are definitely the kind of customer segments that is matching the microfinance vision and mission, but they now really have a lot of digital footprint to start being assessed digitally and by AI on their credit worthiness. So these platforms, these digital platforms on which SMEs and entrepreneurs start to operate now are really a tremendous opportunity for microfinance to go and enlarge their footprint, their outreach. Number one, because as I said, there is the data available. And number two, because also there is this very important relationship between the platform and the SME. The SME uses the platform to collect the revenue, to find customers. So that is what basically is used as the modern kind of digital collateral in these kind of lending, where you say, actually, I capture part of your revenue so I can design products such as repay as you earn repayment method, where we can say, I'm lending you right now, instead of giving you monthly or weekly installments, I can define a flexible installment that will be something like, I collect 15% of your revenue on the platform to go and repay the loan. So if you do if you do more business, increase your revenue, you will pay your loan quicker. If the situation slows down a little bit, then you will have more time to repay, and it's all built in the product. So basically, to wrap that up, I think agent banking and embedded lending, this is what we are talking about here, is a great opportunity for microfinance on the lending side of their business, of their balance sheets, to go and really push the outreach with very innovative experience and products.
Thank you very much, Dennis. There's one question here. I'd like to call on the MD CEO of Action Microfinance Bank. This question is from Bamidele Samuel, and he says, will an organization like Action be willing to work with team leaders and grassroots organizations to help them reach more potential customers as it stands and enable easy access to funds and loans? MD, you're on mute. Okay.
Yes. Thank you very much. Of course, we're open to partnerships and collaborations. It would be nice to know who are the personas or who are behind such grassroots movements. So it's not a clear yes, but where we see value and where we also see an opportunity to educate and an opportunity to partner, an opportunity to help grow financial inclusion, we will always be very willing to play our parts.
Thank you, Mr. Taiwo Joda. To the next question we have from Tela Olamilekan. He's saying, to the first panel concerning the digital literacy, what can we do as us that are still in school, growing into achieve more on digital standards. I think, let me try to put it better. I think he's asking concerning digital literacy, what can them in school do so that they can achieve more digital standards? I think I'll call on Adetokunbo, and the co-founder and CEO of BlueSox to, provide a response on this. Adetokunbo, if this is fine.
Stop.
Okay.
Yeah. In school, how do you create a standard? Please, could you help me with the question again? It's not very clear.
Concerning digital literacy, what can we do as us that are still in school, growing into achieve more? I think this is the way to put it, but I think what it's trying to ask is that for those who are still in school, what can be done, or rather, what can be done in schools as far as digital literacy is concerned? Maybe to bring up the level of education higher so that they also know how to do more digitally.
Okay, well, there is the opportunity for capacity building within the university or within the educational sector in general, right? It's obvious that the way we do things will become more digital over the years. So there has to be some kind of intervention in that regard. So generally, maybe to be, enhancing the curriculum. Now, this is from a government standpoint, but as an individual, you know that the workplace you are going to landing is going to change. It would have changed remarkably from when you started university, right? So you have to be preparing for where you are going to land, not where you are right now. So by the time you are finishing from school in 2-3 years from now, what is the digital landscape going to look like? And I can, all indications is that it's going to continue to grow exponentially. Systems are going to get faster, processing will get faster, computers and hardware will become more capable. So as a student, I think you have to be you have to get good at learning. You have to get good at being able to change and shift your perspective. You have to become good at relearning as well. And then I think you also need to embrace emerging technologies, areas that that we feel will dictate or play major roles in how we do things in the very near future. So I think really as a student, it's about capacity building, and not necessarily depending so much on, or rather learning how to train yourself, right? And not necessarily waiting for structured training and learning, use the resources that are available today, maybe on platforms like YouTube, Coursera, to start to build that capacity so that when you enter into the workplace, you have built up to a certain level that an organization can take you on, and you can start adding value from day one. I think that would be my response to that question.
Thank you very much. There's a question I would like to direct to Dr. Valentine. It's from Kemi, and the question is, how much research would you say go into product design? Specifically, how do providers understand the needs of excluded demographics so that they innovate to their needs? My fear is that providers and designers take the same approach that the government takes to policy, that is, roll out without reliable research and consultation. Should I take it again, Dr. Valentine? Sorry, you're on mute, sir. Okay.
That's fine. I think it's all about product design, and it's very essential if you're going to reach your target audience. So now it depends on who is your target audience. So product research, definitely you need to, just like any other business, you're doing your business plan, you need to do a research on the audience you're going to be catering for. And that is very important. So if you know you're going to be catering for people in the rural areas, and they don't have smartphones, so if you're going to begin to just build apps for them that's going to be a challenge, because most of them may not have the smartphones to be able to do that. So in that case, it means that your design, you have to tailor it to meet their needs. Versus the SMS should be the front. But of course, you can still have your app for those who may have it. So product research is important just for any kind of business you want to do. Otherwise, you lose your audience. You lose it. There must be a target. There must be people you are going out for. There must be, you really need, there's a value you are creating. And like what I tell young people is, if there's no value in if what you're going to do is what A, B, C, D are doing, you're not adding value to the system. And there must be some value you are creating, or you are even leveraging on some that have been done, and then you're creating value on top of it. So I think you can never do without product researching before creating a product. Otherwise, it is, that product is dead before it even arrives to the market.
Thank you, Dr. Valentine. Thanks for that response. I'd like to direct this next question to Yvonne, the CEO of Indicina. We have this question from Okpara Febechuku Chinonyeren. And the question is, financial inclusion and digital literacy are one path to economic development. At the lowest level of the family unit, what are tech companies and financial industries doing to provide homes with the service of their yearly financial planning, putting their long-term goals into perspective? It's quite a long question, but let me go to the last part of it. It says, which report from, or rather, if the financial goals are smart and least convenient sources of funding for the family to meet income expectation, to accommodate the expenditure and investment options to generate funds for the long-term financial goal, which a report from such app on institutions can help financial institutions to rate the creditworthiness of the family as a group of the individual. Any plans for such a service will be put in place? I think he's referring to being able to do a credit rating at the family level as against what we have currently at the individual level.
Okay, just to confirm you can hear me properly.
Yes.
So it's a very good question, and it speaks to some of the growing trends that we're seeing. One of the things about digital financial services is the huge data exhaust. And so increasingly, we're seeing a lot of institutions, whether it's the banks, whether it's the fintechs, the microfinance banks. I certainly know Action is driving a lot of that as well, really digging into this data sources, whether it's traditional data sources, alternative data sources, to really say that, look, let's build a richer profile of this individual, right? Let's really understand what is going on, because then what that does is bring comfort on the level of the financial services provider in terms of what they can offer the customer and at what terms. And especially when you talk about credit and trying to build comfort around kind of, risk appetite, right? So there's definitely a lot of that already going on. Now, the question about, can we do it at a group level versus an individual level? I mean, the answer is yes. I think fundamentally, when we talk about, microfinance in this country and just across the world, and I know Mr. Godwin can speak to that, better than I do. There was always the model of let's put people together in a group and analyze them as a group, right? So that's not new, right? And again, even some of the inbuilt incentives within that group, was able to drive, the success of that. And so now layering in kind of analytics at the group level, whether it's a family or it's a community or whatnot, certainly that's easy to do. And there are some, institutions that are starting to do that, because the data that we're getting on people is growing, and that data is now digital, and there's now more powerful technologies in terms of algorithms and models to be able to analyze data, and with a very good sense of accuracy, be able to determine who is this person, what are they doing, how can I help them to save more, or how can I help them, to increase, the velocity of their business or whatnot.
Thank you very much, Yvonne. We have quite a lot of questions, but we won't be able to take all of them. So we'll take two more before we move on to our closing remarks. We have people from the press, logged in, and this question is from Chinwendu Munachi. She's a journalist with Daily Sun. We have members of the press from Daily Sun, Nairametrics, This Day, and others who joined the session as well. So from Chinwendu Obianyi, who is a journalist with Daily Sun, he has two questions. The first one is directed to Mr. Godwin, and the second one to Mr. Jordan. The first one is to Mr. Godwin. Is a report states that over 50% of Nigeria population lack digital skills. What can the federal government and regulators take or do to ensure financial inclusion? Mr. Godwin.
Okay, thank you. I think what can the regulator, the federal government do to address this challenge in order to enhance financial inclusion? That the statistic is true, I think is there. What therefore government can do, I believe that policy may not do much. It may not do much. It could also go to the area of education. But for me, especially when you talk of people at the bottom of the society, I would probably want to recommend here, it may not be very relevant, the whole issue of adult education. And that midst of that, the model, I mean, the curriculum could include digital education on digital skill, could include that. I believe that government can do. On what regulators can do on this, because it's all about empowerment, providing skill for the generality of the people to do that. Of course, I think the operators, both the technology part and those of us in the financial sector, can, in the process of engagement of people, can pass on some of these basic digital skills. They do it not just for the purpose, for the benefit of the beneficiary, that is the client, which is okay, but again, it's also for their institutional sustainability or viability. Because the more people you provide skills, digital skills, especially financial literacy skill to more people, the more they can effectively engage with you, obtain your services, and of course, they pay for that services, and that can enhance your bottom line. So I believe that it's not just about government alone. I believe that the operators have a very important role to play in passing on skills, digital skills, to the population, and particularly to their customers.
Thank you, Mr. Godwin. And the second question for Mr. Joda is, what has Action done so far this year to enhance inclusion, especially among the underserved, especially amongst the unserved and underserved?
Thank you very much for the question, Paul. And I also thank the press for asking that question. So I think one big one is what we're experiencing now, which is this seminar that we have held in the last 7 years. And so this has given a platform for all of the ecosystem and the industry to come together, to share experiences, and also to discuss how we can better drive financial inclusion. So specifics, we've had several products that we've introduced to the market. We've had the target savings, which we call the Save Brighter. We believe that those who live at the bottom of the pyramid are also able to save, and they can save if they are well guided into making savings. And you can also save for specific things to help grow your business. And we have that, and that is also empowered digitally. We have engaged a lot of digital literacy, especially among secondary schools across Nigeria during the course of the year. And we believe that you need to start digital literacy and financial education literacy, even from the primary and secondary schools. And we've engaged quite several number of schools during the course of the year. We also organized a debate among secondary schools, and some children won scholarship in the process in discussing and understanding financial literacy and digital financial literacy. We have our digital loan. If you go to Axiom Money on either the Google Play Store or on Apple Store, you'll be able to download our Axiom Money and have access to loans of between 150 to 500,000, either for your digital loan to bridge your business needs or to pay your children's school fees. And these are some of the products we've rolled into the market. In the coming days, we are partnered with Just Right on the Buy Now, Pay Later. And this is to help our massive customers to finance their livelihoods. And this is going to come out big in the coming days. And that's also one of the initiatives that we have taken. I will continue to do more. Thank you.
Thank you, Mr. Taiwo Joda. And I think we'll stop there for now for the questions. I think we've taken quite a number. For those we were not able to take the questions, our apologies. We'll find a way to get back to you on them. I'd like to at this time thank the panelists once again for making our time to join this seminar today. It's been an enlightening session. It's been an insightful session. And I think we've garnered quite a lot that we can apply in the industry. And I believe the outcomes of this session will contribute to industry shaping events. A special thanks to all members of the two panels and our keynote speakers as well. At this point, I'd like to hand off to the MD CEO Axiom Microfinance Bank, Mr. Taiwo Joda, for his closing remarks. Over to you, Mr. Taiwo Joda.
Thank you very much. And this just to reemphasize our deep appreciation and gratitude to our wonderful panelists and to the board and the management team in Axiom Microfinance Bank for standing by us and putting this together again. We believe in collaboration. We believe not in competition, but in co-petition, cooperating together to push the frontier. And as we push the financial inclusion frontier, in the FISS positioning of the federal government of Nigeria, they have stated and set an objective to achieve 90% financial inclusion by 2024. And I think we're positioned to support the government in driving this. More than ever, this is the time for fintechs and financial institutions to come together and make this work. Thank you so much, all over the 250 people who have attended and who have made very valuable contributions to this event. I want to thank once again the board, and I want to thank our panelists. Do have a very wonderful afternoon. Thank you and God bless.
Thank you. Please don't log off yet. We want to take a photo, a quick photo. Please just put on your camera and let all your faces show so that we can, our studio will take a quick photo of it, and then that will be it. Ms. Lucia, can you turn on your video, please? Everyone, please, that is a panelist, please just turn on your video so that we can see your face and have a good shot at it. Okay. Thank you very much.
Thank you.
Okay.
Yeah.
Okay. Yes, everyone, please. We still have some people yet to turn on their cameras. Please, let's turn it all on. Let's turn it all on. Okay. Thank you, Mr. Mark. Thank you, Prince Olumide. Gifts, we need yours on. Okay, Mrs. Ibokun, we need yours on as well. Christian, we need yours on as well. Okay. Okay, so we'll take the shot. I'll count to 5 and then we'll take the shot. 1, 2, 3, 4, 5. And that's it. Thank you very much. Thank you. Thanks.
Right.
Thanks for your time.
Bye-bye.
Thank you.
Thank you very much.
Yes.
Thank you.
Thank you.
ní tòótọ́ ṣé pé tí mo bá ṣí àkáǹtì pẹ̀lú Axion wá máa máyé rọrùn fún mi.
Ina son iya karbar kuɗin Access.
Ayodele Emmanuel Alexander, and I'm an accountant. I work with Dula Agro Services Limited. I know about Axion Microfinance Bank over 8 years ago. We following Axion on Facebook as well. So when I saw the advert on Facebook, I just had to give it a try and see if I can, and see if it's actually working. Yes. So then when I tried, and the first one, I think after I took the first loan, the following day I paid off the 8,000 naira I took from you guys, and I actually needed to balance up my kids' school fees. I was having a short of funds. I applied. I was surprised I was given the sum of 52,000. The improvement was okay compared to the first and second. Yeah, so I would like to say that I am very, very happy with it. At least it met my needs as at when I expected it. Yeah, I'm very grateful, thankful. It's been like that very Sunday was like Axion came in like a god for me. Yes, it came in like a god for me. Like when after it started backing on everybody around me, nobody was ready to turn up for whatever I needed to do with money. Axion came in for me. So that alone, I am really, really, really grateful for.
Yeah, I'm Rosemary Okodion. I'm a chartered accountant by profession. The Axion loan, I got to know about it through my husband. I think he mentioned it at home, and as at that time our son was just about resuming school as well. So I thought, okay, let's try it out and know how and see how it works. So the process was quite fast. Accessing the loan wasn't so difficult, because I think after registration and all, we're able to access the loan by the next day. When they said they were going to send the loan to the school, we're able to access it by the next day. So it was quite fast. Accessing the loan was quite fast, because I think as at when we registered and all, I got the money in my account same day. Then by the next day, they were able to transfer it to the school. So that was it. Repayment has also been good. Since there's a fixed date as to when you are to repay, so it has been good also. Repayment has been good. So far, then the flexibility of payment, because there were options of like how you want to pay. So there were different options. So the flexibility was okay with me. I liked the flexibility depending on how one wants to repay it. So I enjoyed that flexibility. The ease of accessing the money was good, because I think we got it. I think as at the day we registered, my account was credited. Then the next day they were able to send to the school. So that was the flexibility I really enjoyed that. But the loan experience so far, for me, it's good. It's good because it is that stress. Then being able to spread the repayment plan was also quite welcoming for me. I'd like to say kudos to Axion. They are doing a very good job. Like, it's taking stress off us, like certain kind of stress. Like the one doesn't really have to bother about. Surely that school fees loan, like since it's a quarterly thing, so at least taking off that stress, like trying to, because for us it was the first time. It was the first time we had like paying so much for. So it really took off the stress and stuff. So it was helpful. So I was saying a very big thank you to Axion for that, for the school fees loan. It's been very useful to the family, and we appreciate it. Thank you to Axion.
My name is Mr. Anselm Chukwujeku Anetos.
Mrs. Gabriel Esther. I'm cater for people, catering work.
We are doing tow motor and motorcycle spare parts. Years.
I've been into catering for almost 18 years. Wọ́n help business mi láti fún mi ní loan of 300. So at the end of the day, wọ́n padà wá fún wa ní 500,000 báyìí. Nígbà tó kọ́ débí, so náà kọ́ fún wa ní 300. Láti lè máa boost the business wa. Dúpẹ́ lọ́wọ́ wọn.
In many ways. So they help me boost my business in terms of capital and other facilities. I rate them very, very, very hard.
Wọ́n ṣiṣẹ́ takuntakun torí ní àkọ́kọ́ nígbà tán kọ́ débí wọ́n wá sínú ọjà wa wọ́n bá wa ṣe environmental ọ̀dọ́ wa wọ́n dẹ̀ ṣe dáadáa. At the end of the day wọ́n tún padà wá ṣe health check-up wọ́n padà ṣe fún wa níbí láì gba $1. Àdúpẹ́ lọ́wọ́ Action iléeṣẹ́ yìí ò ní jóná.
Action, star 572 hash. Now the code Action, star 572 hash. Money go. Open account with Action to save for tomorrow. There's an easy way to bank every day. Hey, star 572 hash. Now here we go. I know get wahala. Oh, it's a life. Oh, money on the go. Star 572 hash. Oh, get a life. Oh, my future is bright. Star 572 hash. Send money to family and friends and business partners on top your phone. Wherever you are, whatever you do, hey, pay your bills and recharge
Jiri
your
ni
phone.
Action Bank we kwụgwọ kwụnụ. Piano star 572 hash.
Yalla na kauna Allah ka turo mu kudi akan Asia Bank dina.
Má ṣe ìyọnu láti lọ sí ilé ìfowópamọ́ ìwọ ṣáà ti tẹ star 572 hash lórí ẹ̀rọ ìbánisọ̀rọ̀ rẹ.
Action Microfinance Bank. My future is bright.
Ní tòótọ́, ṣé pé tí mo bá ṣí àkáǹtì pẹ̀lú Action wá máa máyé rọrùn fún mi?
Ina son iya karɓar kuɗin Access Bank na yi amfani kai ƙara kasuwa ta.
Chai, Action Bank nwekwara na ATM card.
No need to stress, I no need the stress. With Action Microfinance Bank, I deal with the best, I no settle for less. Bank where they make it life better. With checking the money, you fit open account. Save money now to pay your bills. And you fit to get it loan to grow your business. Well, my future is bright, oh. My future is bright, oh. With Action Bank. With Action, oh. My future is bright, oh. With Action Bank. With Action, oh. My future is bright, oh. With Action Bank. With Action, oh. My future is bright, oh. It's bright, oh.
Action Microfinance Bank. My future is bright.
Chai, Action Bank nwekwara na ATM card.
No need to stress, I no need the stress. With Action Microfinance Bank, I deal with the best, I no settle for less. Bank where they make it life better. With checking the money, you fit open account. Save money now to pay your bills. And you fit to get it loan to grow your business. Well, my future is bright, oh. My future is bright, oh. With Action Bank. With Action, oh. My future is bright, oh. With Action Bank. With Action, oh. My future is bright, oh. With Action Bank. With Action, oh. My future is bright, oh. It's bright, oh.
Action Microfinance Bank. My future is bright.
Mama soft, you don't dey stock your shop again. Come cut soap for me abeg.